Keith here for Am I Rich, and today have we got a deal for you. Yes, TJX. Well, we'll have to see if it's a true deal, but it could be trading at a discount. That's why I'm looking at it. And so TJX, they are a company that owns several big discount clothing and discount home apparel retail stores. Their big brands are TJ Maxx, HomeSense, Marshalls, Winners, and a few others. They are mostly 70% based in United States and Canada. They also have quite a substantial business in Europe, mostly the UK and Germany, as well as Australia. Now this company, they basically have the advantage of selling clothes at a cheaper price, but are brand name clothes by trying to buy inventory that people have trouble moving. And so they get these clothes at a discount price relative to big stores that just sell the actual brands. And this gives them a bit of an advantage, although their inventory is often a little bit less than desired for some people. But they hit trends occasionally, and they have this kind of landscape where people go in and try and look for bargains. So that's kind of their business. Now, the price of their stock currently is sitting at $50.50, I believe. They have a PE ratio of 20.7 and a forward PE ratio estimated at 19. Price to book ratio of 12 and a dividend of 1.5%. Its 5-year growth rate has been about 15.7%. And it is expected to be at least in the 9 to 10% range in the future or above. So why do I think this stock is potentially cheap? So its PE ratio at 20, kind of an average price, and its price to book ratio is overpriced. But this stock has traded at a premium for a long time, and this is why it could be a value for people who buy into it now. I don't know that it will be, but my positive thesis on this would be this company, when there's a recession, most people are looking for bargains. So this company has good brands that it sells at bargain prices. So people will go there and they will try and get a bargain when they have less money. So I see it as a fairly stable company in a recession. Even at good times, I know lots of people, they still go there. It doesn't matter their income. They still go there for bargains because they like the bargain hunting. And as long as they're in malls or in shopping areas and they go to these places, they always say, well, you know, you could get a pair of designer shirts or jeans or something in one store, but they go to Winners or TJ Maxx and they just think this is going to have similar products for a lot less price. So they always go there. Lots of people are going there. I mean, not everybody does, but a huge portion of the population does go there. So I see this as a great strategy for the company. It also was not a company that was affected by big online retail like Amazon. They haven't been able to shake their main base of customers. So I feel that this does give it a bit of an advantage. Now the company, I feel, is overpriced, maybe double the price of what it should be, maybe even more than that. But because of its moat in what kind of business it does, and I don't see a lot of serious competitors. There are, but depending where you are, you don't see a lot of serious competitors for this kind of niche retail business. So that's the positive thesis on it. A lot of people like the company as well, so they might be buying it for love and kind of pumping the price up. And what makes it an interesting buy right now is back in November it was at its highest prices. They recently split the stock, and so I feel like a lot of people, not only because the market was crashing, but because maybe there's some confusion in the numbers when they split the stock and people have like spreadsheets or some kind of calculation on how they value a company, it becomes a little bit more confusing, the numbers. So a lot of big hedge fund managers probably see it fine, but people who buy it for just the love of the company, when they see the price go down by half, they might not in the numbers, they, suddenly the earnings are half, and it just kind of throws that little wrench in there, so people kind of might sell in a panic. So I see that the price has dropped since last October, November, and this might be a bargain in that sense. Generally, this company trades, like I said, maybe 2 to 3 times what it should be valued at. So I kind of see this company as a possible, at a possible value of somewhere in the range of $62. It's currently at $50, so it is a pretty big upside, and that's why I do think this is a very interesting buy. Now, the negative thesis on this stock would be that they could have competitors come in, or they could have their supply chains dwindled somehow because people don't like their niche market if they're not doing well. But that seems somewhat unlikely, or at least you'd have a good advance warning of it. The other possibility is people, for some reason find that this company is overvalued, and because of that, if it was priced more at a reasonable rate, I could see the stock dropping easily 40%. So kind of a big, because of its overpriced value, even though people have held that overpriced value for a long time, I do see the room for it to drop significantly. And so although there's a great chance it could go up, I would personally hold on this stock for now, but it's something that does pique my interest. If it drops, more than that, if it dropped 40%, I would probably see this as a great buy. But at the moment, it's just something I'm curious about. And if people are very bullish on it, I see this company doing at least 9 to 10% growth, probably more. I mean, it's been growing, it's very consistent. It's been growing like 15% in the last 5 years, and it's planning to keep growing that way. Very recession proof. Lots of people love it. And they like the whole bargain atmosphere, so that's just keeps them kind of glued to it. And they have good supply of clothes that they get, and other kind of home apparel. So yeah, that's kind of my thesis on TJX. I would hold, but I do see this company likely to go up, especially in the next 3 to 6 months. But with a caveat that there is a very significant downside risk to this company, so that's why I just would stay away from it. I'd love to know what you guys think. Do you guys think this is a bargain? I mean, buying 2 pairs of pants for the same price as one, the only difference is maybe the one has pockets sewn on a little bit crooked. Is it worth it? Maybe. So what do you guys think? Is this a deal that's just kind of hidden in the rack, or is this company really just kind of a grungy store that smells like old wax candles? You let me know in the comments. Other than that, thanks for watching, and we'll see you in the next vid.